I felt that there was a need and no one was really addressing that need. And I wanted to jump in there with my 2 cents, and I think we've done a pretty good job.
Investors haven't had much to be hopeful about with Mullen Automotive stock this year, and it's been a rough ride. The company's value has plummeted by 95% in the past 12 months due to negative developments and failed timelines. In fact, the third week of March saw a shaky performance from Mullen stock with a fresh 52-week low. And experts say economic challenges have contributed to the company's struggles this year. Nonetheless, some remain optimistic about Mullen's future growth prospects despite conflicting evidence. While only a couple of price targets have been issued for this volatile meme stock, two on Fintel suggest that Mullen will climb above $20 a share within the next 3 years. So, is Mullen headed for a comeback? Unfortunately, it's doubtful considering all that's happened. But let's examine just how Mullen stock needs to rise to meet these targets. So, stick around all the way to the end as we break down how it's possible and why it's impossible. Fintel, a market analysis platform, recently shared that Mullen stock's average one-year price target is $23.46 per share. This projection has a wide range, with the lowest at $23.23 and the highest at $24.15. Right now, Mullen trades at 13 cents per share, which means that hitting the projected $23 mark would require an astounding 15,655% increase. This is no easy feat, especially for a company like Mullen that has faced its fair share of struggles. Even the strongest growth stocks would find it challenging to rise over 15,000% in less than 2 years. But that's the ambitious goal set by some unnamed experts on Fintel. However, there's no clear context for why they believe this. What is clear though is that Mullen stock won't reach $3, let alone exceed $23. The ambitious price targets didn't help Mullen stock, as shares closed down by over 9% today. Even though the company reported good news about fulfilling a cargo van delivery order, the decline shows investors aren't convinced. You see, Mullen has a history of missing deadlines, so it's difficult to trust such announcements. And to make matters worse, the company is in danger of being delisted from the Nasdaq after failing to hit the $1 per share deadline. Last January, Mullen finally held its special meeting of stockholders after delaying it several times. Shareholders attended and cast their votes on a reverse split proposal that ranges from 1-for-2 to 1-for-25. Mullen announced afterward that they have no plans to execute a reverse split. But if the Mullen stock stays below $1 until September 6, Mullen will perform a reverse split to comply with Nasdaq listing regulations. Mullen belongs to the Russell 2000 index, and being a part of it means their shares should have a minimum price of $1. The index has its rank day scheduled on April 28, and for members to stay included, their shares should be worth at least $1 on that day. So, if the share value is less than $1, the member can still be considered if their daily closing prices average $1 or higher for the 30 days before the rank date. Once rank day is over, the index will rebalance in June. If Mullen's share price is still under $1 at that time, the company will assess whether it's in the shareholders' best interest to do a reverse split. Unless Mullen stock can naturally climb to $1, investors should anticipate a reverse split happening soon. Furthermore, Mullen Automotive suffered a double blow on March 6 when their accounting firm, Nasdaq Bolton LLP, announced their resignation, and a smaller firm, RBSM LLC, will take over. This is not good news for investors since downsizing an auditor and sub-$1 share prices often lead to delisting. Despite Mullen's consistent updates, their risky financial decisions could lead to their downfall. So, to prove they're not cooking the books, every public company on the Nasdaq or NYSE must release audited financials once a year. Auditors can always be trusted since they're paid by the same companies they audit. This can create a conflict of interest where they're more interested in keeping management happy than protecting shareholders. Do you remember Enron? Accountants at Arthur Andersen helped them hide their dirty laundry, and now FTX's accountants are accused of ignoring evidence of wrongdoing. Audit firms are most concerned about their own well-being. The American Accounting Association says the biggest reason auditors quit is the risk of getting sued. If a company is caught committing accounting fraud, the auditor is also usually held accountable. Mullen's situation is noteworthy because their audit firm resigned after planning a merger with ConResnick LLP, a large accounting firm with many employees. Bigger firms are usually more cautious about getting sued because of the collapse of Arthur Andersen. Since Mullen had a six-figure contract with Dascal Bolton, they were let go. It's pretty clear why things look fishy. When Mullen partially bought Bollinger Motors in Q2 2022, they used some pretty sneaky accounting tactics. They moved around $77 million of cash between related parties and made some generous assumptions about the value of patents. The acquisition of Electric Last Mile Solutions was just as suspicious, with $55 million labeled with vague terms to avoid it being classified as goodwill. Furthermore, the SEC has accused a financier named Mullen of insider trading. Mullen Automotive, Aquitas Group, and Aquitas CEO Terence Pazer have complicated financial relationships. They've made multiple deals involving giving away equity and taking on debt. Recently, Mullen Automotive updated its agreement with Aquitas on March 2. This is even though the CEO of Aquitas was just charged with insider trading. As per the new agreement, Aquitas will buy Series D preferred stock and warrants worth $20 million with an exercise date of June 1. On March 1, the Securities and Exchange Commission dropped a bombshell by slapping Terence Pazer with insider trading charges. The SEC alleged that Pazer sold more than $20 million worth of on-track shares, while he had access to material, non-public information about the company's biggest customer. As a result, Pazer resigned as CEO of OnTrack. The U.S. Department of Justice also swooped in and filed criminal charges against the former CEO. Before we continue, we want to thank you for watching this far, but let's know more news about Mullen. On the brighter side, Mullen announces Randy Marion orders are progressing as planned and on schedule for delivery. Randy Marion Isuzu ordered 6,000 Class 1 EV cargo vans worth $200 million in December. Despite this news, Mullen stock is still at its 52-week low of 14 cents. However, it looks like Mullen will keep their promise as they announced that they would deliver Class 1 EVs to Randy Marion Automotive before the end of March 2023. Amazingly, we have updates from one of the self-proclaimed Mullen Army from Twitter at Nikki Dickey. A few of Mullen's cargo vans got spotted from the Randy Marion fleet parking lot at Mooresville, North Carolina, 130 West Plaza Drive. With this positive news, Mullen's opening price on March 29, 2023 is slightly higher, climbing back to above 10 cents. However, is this enough to recover to at least the $1 mark? As of February 28, Mullen had a whopping $87.40 million in cash, restricted cash, and cash equivalents. Last December 31, they had a little more, with $107.42 million. But wait, Mullen's expecting to get another $110 million by June 1. With all this cash on hand and the expected receipt, they're confident that they have enough moolah to keep the business going for the next year. So, if you're wondering where's the $110 million coming from, well, Aquitas Capital might be the source of some, if not all, of the cash. They've agreed to buy Series D preferred stock on June 1, and once the payment is made, they'll get warrants for 185% of shares of common stock. This will come at the expense of existing shareholders, as it will dilute the shares. Mullen's been hanging on in the game longer than people thought. However, every day brings more bad news that could ruin their chances of progressing in the EV industry. It's crucial to remember that Mullen stock has mainly stayed relevant because of retail investor interest, but that doesn't make it a safe investment. So, don't count on shares reaching $23 anytime soon. So, what are your thoughts on this? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know about some good news about Mullen, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.